So first speaker this morning, Mike Roan. Mike runs Meridian Energy's wholesale markets team. The team is accountable for underwriting all retail and wholesale electricity sales and purchases while dispatching Meridian's generating facilities and managing our operating consents. The team also trades the ASX futures market and manages obligations in the electricity market. Mike took on his current role with Meridian in 2008, just before the notorious dry winter kicked in. He works closely with myself and the retail team to ensure that Meridian can deliver market competitive products and services to our customers while managing the risks inherent in relying on renewable forms of fuel. A tricky job. Mike's got extensive experience in both the energy and finance sectors in New Zealand and offshore, including 6 years in the US, and it sounded like, talking to him last night, he spent maybe a bit too much of that time in Vegas. Anyway, please welcome Mike Roan to the stage, who's going to give us an update on the New Zealand electricity market. And you may have lots of questions for Mike, and I encourage you to share those with Mike at the end of his presentation. Welcome, Mike.
Hey. Thanks, Paul. Can everyone hear me? Mic's going very good. Hey, thanks everybody, first thing, for showing up. Hey, it's an early start, so appreciate you guys, because everybody's busy in their day jobs. My job here this morning is pretty simple, which is give you some useful information. And as Paul said, the questions that you have for me are as useful for me as hopefully the information that I give you in return. So please do ask them. I'm a wholesale market expert, as Paul said, run a wholesale team for Meridian, renewable assets, interesting assets to operate, because we never quite know when our fuel's going to show up. But as importantly, we have a number of people from retail teams, and so if you do want further information and follow up, I saw a couple of our key account managers in the audience, and I just get them to stand up to the extent people don't know them. There's Lynn and Narendra down the back, down there, so they can take a lot of the info that I've got and put it in a retail context, which is particularly important for you, and we've got other Meridian folk around the room, so certainly follow up with them as well as questions that you might have for me. So, hey, I'm going to talk to you about where we're going next in the New Zealand electricity industry as soon as I've got through this disclaimer, because the Financial Markets Act requires me, particularly because the stuff I do is really technical. It's kind of boring in some ways, but quite technical. And key piece, don't worry about the words. The key bit is, don't take what I'm giving you as advice, it's info, right? So it's information that you can use. If you really want advice, grab someone and pay for it. Talk to one of the key account managers, but grab someone who's going to help you. So with that, we've done these seminars a few times. This is the first time to Hamilton, but at previous seminars, I'm not going to bore you with some of the stuff that we went through, but these messages are particularly important, eh? And at previous seminars, we have told people straight up, you can see it in all the data anyway, but electricity prices, wholesale electricity prices that is, have risen by 5% per annum since 2000. People have seen ever-increasing prices in the electricity market. That's hard to take, eh? Doesn't matter whether you turn the lights on at home or turn them on at work. That is something that's hard to take. And the next point is just as important, which is our forecasts and every other forecaster in our industry is suggesting that these prices are going to continue to increase. It's like, damn, right? But the prices that you see today are likely to increase in the long term and driven by the same stuff that's driving our petrol prices, right? We rely on some of those fuels, the steel that goes into the ground to build stuff. The cost of most things is going up, and those drivers impact the price curves in our business. The beauty, and you sit there and you go, man, I've got no control over this stuff, right? Because that's where it leaves most people, is I have limited control over the product that I need to make my business successful. You do have control, and that's why, as Paul mentioned, we talk about it with people. We've got sustainable bones in our company. We're a renewable energy company. You control the electricity that you use. You absolutely control the electricity that you use, and some of the technologies and the facilities that are out there that assist you in managing that electricity consumption are incredible. The technology that's emerging and the expertise is absolutely outstanding. So You can control electricity use, and of course, as importantly, you can contract out of exposure to price volatility, because New Zealand is unique, eh? I mean, we know it, we live here, we love it, right? But it's unique from an electricity perspective as well, because we primarily rely on renewable resources. So we have a bit of coal and thermal generation, but we do primarily rely on renewable resources to produce electricity. The same stuff that we ski on in the winter, the mountains that we ski on in the winter, that snow rolls down into the hydro lakes that are primarily down south. Got tons of wind farms around the place that we tap into, and we also have a big and growing geothermal base. So the takeout from previous presentations for everybody is controlling electricity consumption while contracting out of the price volatility that exists in New Zealand is quite unique, will become increasingly valuable. Those two things. If you walk out with nothing else from me, is thinking about the control you have over your consumption and contracting out of price volatility are two things that are absolutely within your control, and they'll become increasingly important to you. So what I'm going to focus on now, right? So those two messages, if you don't hear any of this, or it's boring, or it doesn't kind of hit the spot, those two messages, walk out with them. I'm going to talk about some stuff that's going on in our industry, So what might be of interest to you, and how might it impact the decisions you make. So here's the price forecast. So this is reasonably updated. This isn't us, this isn't Meridian saying prices going up. I mentioned that our price forecasts show that electricity prices are going to increase, but so do all the independent analysts and advisors show the same thing. And this is MED, Ministry of Economic Development. It's all publicly available info, so I just hauled this off their website. You guys can get it. The source reference is down the bottom for anyone who's interested, but they project prices in the electricity market as well, and important for everybody to see this graph. May not like the info, no one likes it. Shit, who wants bloody prices going up? But it's important that you've got it, right? So don't bloody step aside, straight talk with people. First time though, first time in our industry since 1960 that there are some crosswinds. So we've got some interesting crosswinds, So this stuff is, it's fascinating how real it becomes. We don't know yet. But we do know the global economy is weak. Anyone who's bloody seen the news, it's full of that weakness. So global economy out there is really struggling, and that translates a bit into New Zealand. I don't know how you feel those pressures in your respective businesses, but we're certainly watching it, and New Zealand electricity consumption has weakened. I'm going to explain that in a sec, but that's something that hasn't occurred in our sector, as I say, since 1960. And there are also reasonable and increasing levels of supply to meet electricity demand, absent a hydro shortage. As Paul said, 2008 was an absolute nightmare. I don't know if you guys remember it. I remember it. I'm reasonably scarred by it, to be honest with you. We rely on hydro energy for fuel, water. It's simple. If it rains, things are looking good. If it doesn't rain, it all gets bloody tricky. And there wasn't much rain in 2008. Interestingly, there was less rain in 2012. And in 2012, we did a much better job of managing it. Didn't hit the press, which is fantastic, because the press don't tend to present good stories about energy companies. But when we don't get that fuel, it gets particularly tricky, and prices tend to rise, and I'll show you that as well in a sec. But here's the graph, So this here is interesting. As I say, fascinating for someone like me, interesting for you dudes, but maybe fascinating if you're technical bent like me. You can see that's a graph of electricity consumption and just growth, really. And you can see that even though it slowed down, up till about 2005, or 2007, sorry, it was growing, and it has. That graph all the way back to 1960. If I threw the graph up there, if you're interested, it'll be on a public website somewhere. But since 2007, New Zealand electricity consumption's flattened. That curve has changed. Now, a lot of people out there will tell you, it's short term, it's a blip in the ocean, doesn't really matter. I can't tell you that, and I can't tell you that it's going to continue to do this, because as I mentioned down here, I don't know if everyone can see the bullets and the words that I've got on the bottom, but the drivers of the flat demand are pretty well documented in our sector. So low inflows in 2008. In 2008, everyone was asked to conserve consumption. It was all over the news. Please stop using our product. What the hell are we doing? But you know, people do respond to that message. So 2008 is part of the reason for that. 2008, 2009, there was the global financial crisis, and people got a little bit more sensitive about the money that they were spending. There was a big transformer failure down at the aluminium smelter. You guys probably don't remember that, but that's actually that piece there. So that's that little piece of the graph right there. Is Rio lost a transformer to one of their pot lines, and one of their pot lines is they consume lots of electricity. If you're an electricity buff and you want to see electricity used, go to TY Smelter. It is like, wow, you can just sit there forever. They use electricity, it's incredible, and the way they use it is amazing. But that transformer failure is part of the reason for the flat demand. And then of course we had the Christchurch earthquake, and there's improved energy intensity going on within all your businesses. I bet you that there are lots of stories, even in this audience today, about how you're using electricity more intensively or effectively and reducing waste and consumption and controlling your own use of electricity. It is real. So looking forward, when we look forward, we're kind of sitting there going, we're going to see growth, right? We're likely to see electricity growth, but we may not. First time it's may not. That's why I say there's a bit of a crosswind out there. And you can see it possibly in this graph. This graph just reflects the available supply sources, so they're stacking up just here, and that's demand growth. So this is where we are today. So just here today. And if demand continues to grow, as it has historically, we need to add a whole lot more supply. Right? So we won't have the supply to meet people's consumption. However, if it grows reasonably slowly, then we've probably got a bit more supply than we need in our market. If it stops growing, we've probably got a lot of supply. And if it reduces, then we've got more supply again. You probably see some of our capacity exit the market, which typically happens. So there's a bit of a crosswind, and this graph does include 2,000 gigawatt hours, which is just a technical term, I know, but of new supply being added over 3 years. It's basically rolled past the Huntly power station, and you'll see the size of 2,000 gigawatt hours. That's about what Huntly produces every year. Now, uniqueness of NZ. So that's a good news story. Anyone consuming electricity in New Zealand is kind of going, wow, demand may not be increasing that much. That might have an impact on price. It may have an impact on price. That's the key bit. That's kind of the message I'm saying. It may not, though. Still manage your contract base based on your business's exposures and your, particularly the cost of electricity. Don't kind of walk out of here going, wow, that dude said prices are going down. I'm not telling you that. I'm just giving you some crosswinds. Because NZ is an incredible place to do what I do, given its reliance on hydroelectricity. When we don't have hydro fuel rain, when it doesn't rain down the South Island, and that's what this graph is, I'll explain it in a sec, electricity price, doesn't matter what else is going on in the market, demand, oversupply, it doesn't matter. Prices go up, they go up massively, and they get incredibly volatile, and you do not want exposure to that. You're trying to run a business, you do not want people walking in with these massive electricity bills, and that is unique to New Zealand. I've never seen anything like it. It's why I love what I do, because my job is to try and control and manage it so we can sell our product to you and your businesses effectively, so that you can contract out of that exposure and let my team manage this volatility. But this graph shows, hopefully, some way, it's a picture of inflows since 1960. And we'll go back. What you can see is most years you're kind of floating around an average inflow of about 700 cubic metres per second into our lakes. When you get a hydro shortage like we just had in 2012, so this little red bar here is 2012. These aren't in date order, by the way. These are just in order of the highest inflows to the lowest inflows. You can see 2012 was the lowest inflows on the hydrological record for Meridian. So the period we've just been through with the lowest set of inflows, lower than 2008. 2008's right here, it's the third bar, right? And the next one in there is 1970. I think you get this as a piece of a pack, eh? Cool info. Oh, I think it's cool info. Important info for anyone consuming electricity, because that's the real simple dynamic that correlates with electricity prices. And on the next page, I'll show it, is that bullet. New Zealand electricity prices are largely a function of hydro storage. They truly are. They truly are. They're not the only factor for hydro storage, but they truly are one of the dominant features. And you can see it in this graph, hopefully, again, if I explain it. So on the y-axis, that's just dollars per megawatt hour, or you can do it in cents per kilowatt hour. So $600 a megawatt hour will be the equivalent of paying 60 cents a unit. And this is just electricity, this is not lines charges. So think of that as 60 cents a kilowatt hour, and over here are just the months in a year. What you can see is in 2011, which is the blue line, prices were reasonably low. We had heaps of energy. We've got quite a bit now too, actually. We had heaps of energy in those hydro lakes in 2011. Bit of an anomaly, and the average price in 2011 was 4.2 cents a kilowatt hour. It's pretty good, eh? You know, anyone who's consuming electricity in 2011 paying 4.2 cents is doing pretty well. But of course you offset that with what happens when it's reasonably dry, and you can see 2008 is the green line, the psychedelic one. You know, someone's bloody been out too late. Prices in that year, you're paying 11 cents a unit, and in 2012 you're paying 11 cents a unit. Different characteristics, but that volatility, and if you were exposed to the spot market in these months and you were heavy consumers, well, I can tell you an average price of 11 cents, you know, is pretty hard one to swallow compared to 4 cents. You're actually paying, topping up 40 cents a unit. So if you're consuming, you know, you just happen to have a business that relies on electricity, you consume it in May, then forget the 10 cents or 4 cents or whatever you were doing before, you're paying 40 cents a unit and your business probably ain't profitable. So hydro storage is a massive factor in how prices are formed and set in NZ. As I say, they're not the only factor, but they do have a large bearing on what spot market prices end up being in any given year. And the volatility that sits in there has and will continue to destroy businesses that choose to take just spot exposure. Spot market is a place you need some serious, I call it intestinal fortitude, right? Because there are times it's going to hurt if you do take spot exposure. Doesn't mean, again, that some spot exposure is the wrong thing for your business, but just understand the risk you're taking. And it's a choice not to contract, to take exposure to the spot market. NZ is bloody unique in that regard. It's really unique, eh? Now moving forward, so that stuff's a little bit about kind of what's going on, what drives prices, what are some of the crosswinds, demand versus hydro storage. Moving forward, there's some big decisions that are being made out there at the moment in our market as well. So our competitors are looking at some material decisions because they're looking at those demand curves and they're going, well, is consumption going to grow? Don't know. Are my units going to be profitable? Don't know. So Genesis has already said it's going to shut 2 of those Huntly units. So it's going to shut one in the end of 2012. It's going to shut another one at the end of 2014. So 2 of those units are being removed from the supply stack. That's going to change their business model, their interest in what's going on quite materially over the next couple of years. It's going to have an impact on the wholesale market as well. So there's a couple of things that are particularly interesting to me, again, because they'll affect how wholesale market prices are formed. If they affect how wholesale market prices are formed, then they affect how retail prices are formed as well. You know, it's a flow-on effect. And Contact's looking at Otahu. So Otahu was built in 1990-something. I don't know, does anyone know the date? I think it was 92, but could have been a bit later. It might have been a little later in the 90s. But 20-year life, eh? So Contact's got a lot of work to do. at Otahu Power Station, which is a big combined cycle power station in Auckland. So don't know what they're going to do with it again. I'm just telling you that they're thinking very carefully about whether they repower that power station, whether they do some serious maintenance on it to keep it running for another 20 years, or if under that example where demand doesn't grow, they might shut it down. Who knows? Right? But there's a couple of key decisions that have been made by our competitors along the way, and there's a couple of specific challenges that we've got to overcome in the short term. So this is another piece. Next 6 months is fascinating. I'm using this word fascinating a lot, But again, there's a lot going on in our industry that hopefully convey to you it's worthwhile considering contracts over the next 6 months for the reason that I'm presenting now is Transpower's got a hell of a lot of transmission upgrades on its books, and they're about to crack into them, and I'll show you. Genesis is relining Tekapo Canal. Anyone been down to Mackenzie Basin, power stations down there, majority of them are ours, they're awesome. And Tekapo's awesome as well. I mean, it really is an incredible asset. But they're taking the canal out, so the canal's coming out of service, and that means that those power stations won't be available to produce energy for a 3-month period, January through March. Why is that interesting or important? That capacity taken out of the market, there's not that available supply in the market. It means that consumption's got to be met by other forms of supply. So there's lower levels of supply when Genesis do that Tekapo Canal outage. And of course we all know that NZAS, so our biggest customer, the aluminium smelter down Bluff, is talking to us about its contractual terms and what it's going to do in New Zealand. And it's 12% of New Zealand's demand. So all sorts of rumour and speculation out there, they're going to go, they're not going to go, you know, they want a better price. Who doesn't want a better price? But the reality is, it's in the media that NZAS are thinking about what they might or might not do. I wouldn't speculate if I was sitting in the audience on what someone else's business is going to do. I'd be thinking about how to control the risks in mine. But it is out there. Map in New Zealand, show this graphically, right? Transpower's grid upgrades. So Auckland's had a few troubles lately. Hopefully no one got caught up in those troubles, but prices spiked up there pretty massively a year or so, and it was ugly. Transpower's building a 400 kV line. In fact, probably, you know, you guys seen the press on that as well. They had to go through people's land to get this line in to Auckland, and that was quite challenging and difficult, but that's going to be commissioned in November this year. Fantastic for anybody living and consuming electricity up this way or into Auckland. They've done a whole lot of reinforcement and changes to the grid configuration for Hamilton as well. Sorry, go back. Down here, right down kind of South Island, Fiordland, they're upgrading the transmission capability from Manapori Power Station. If anyone, other than Vegas, which I did say to Paul last night, is a place everyone should visit in their life, incredible. You can do anything you want, you know. Go to Manapori Power Station. Sitting in the middle of the fjords, unbelievable place, that we make electricity in the middle of a rainforest. Transpower are upgrading the lines so that we can actually take more electricity from Manapori Power Station and push it closer north. And the picture, I'm building a little puzzle, I think it's kind of funny, but you guys can tell me afterwards. So they're upgrading transmission lines between Manapori Power Station and one of the big grid connection points in around Clyde. And then they're upgrading the HVDC link. So the link between the South Island and North Island. So our capacity to take that beautiful renewable energy from those southern hydro lakes and bring it into the North Island is improving as Transpower complete this upgrade. But it's going to be a whole lot of commissioning to get it done. And they're doing that February, March 2013. So we'll get lots of that clean juice up to North Island markets. Tekapo Canal is being relined, as I say. That's of particular interest to us because not only does it remove supply from the market, but the Tekapo Canal connects to Lake Pukaki. Lake Pukaki is our main storage lake. So if you don't have, if the tap's not on, the storage lake ain't filling up from Tekapo. So we're relying on natural sources of water for inflow rather than water from the Tekapo Canal. And then finally, Transpower are doing some strengthening work around Taupo. For some reason, People like living around Taupo, don't know why that would be. And then as they connect up, they're going to do some lower North Island upgrading as well. And so there's my jigsaw, eh? I think I was quite clever in the way I did that, but you guys, as I say, can tell me what they're doing. It's pretty simple, really, is upgrading the transmission network to connect those hydro facilities more effectively with where everyone lives, right? Which is up this way. So, and this is where the consumption growth is really occurring. So Transpower's doing a heck of a lot of strengthening work to make your supplies more secure. And while most of it's going to Auckland, as I say, the way that they're connecting it, and there are spurs off each of their investments to make sure that the growing consumption bases are more secure in their supply. The cost of that is short term, so as they go through that commissioning, it gets a little tricky when you take out massive transmission elements to maintain that security, and prices can, I'll call it wobble, but you guys would call it a price spike. So my job is to manage all this for Meridian. Now, I had a team of 40 people who focus on it, right? And the only reason for saying that is it'd be bloody hard for you guys to replicate what we do unless you're willing to employ that many people to do it, right? So don't. Right? I know sometimes it seems you can get a better deal doing things, sitting on spot market, taking exposure. It is tricky. As I said, you have to have intestinal fortitude to effectively participate in the spot market, and you have to have a lot of smart people and some pretty sophisticated engines. Focus on your businesses. Contract out of the risk in mine so you can focus on yours, right? Don't choose to take it on without knowing you're making that choice. And if you make the choice, which is cool, you know, because everything's a choice in life, but if you do make the choice to take exposure to the spot market, understand it's a choice, right? So don't blame anyone else if prices do spike at that point that you made that choice and you've got that exposure on your book. Otherwise, contract out of it, eh? We put a hell of a lot of resource into managing it for Meridian, and we still get it wrong. I hate to say that, eh? Hopefully there's no one too serious. Don't take that back to work, Paul. But we do, eh? And that's, again, go back to New Zealand. We rely on renewable energy, right? So the rain and, you know, TVNZ, we watch the news, right? And every day they tell us, you know, that it's going to rain and it doesn't, or it's not and it does. And it is bloody tricky. Small island, you know, somewhere in the Pacific. The currents that flow around us, the oceans, dictate the weather patterns, and then the weather events that do flow over us can just get pushed out of line very, very small degree, you know, 1 or 2 degrees that misses those hydro catchments really, really easily. So we do get it wrong as well. There's no perfect in our business. So what does it mean for you? This is my summary slide, so I'm finishing up, eh? There are some cross currents for electricity prices, right? So the forecasters, including Meridian, are forecasting they're still likely to increase, but there's some dynamics out there that we are watching quite carefully. There's real specific risk in the short term, right? So price volatility is there all the time. That reflects New Zealand, clean and green. It's usually good, sometimes it's tricky, but the next 6 months do include some specific commissioning of equipment, primarily through Transpower, that might see some price spikes eventuate in the market. So a little bit more risky than what would normally be the case. The contracts provide relief from volatility. They might provide relief from some form of price shock, but they tend to capture price rises because we do have a reasonably well-developed forward market in New Zealand, but they do manage any exposure that you would have to volatility because they've got a fixed price, obviously. When you think about the duration of the contracts you enter into, think about your own businesses and your own business risk. Match the contract duration to how you want to make money in your own business. You know, so if you take 3 years to make a return on an asset, structure your contracts over 3. If you want to take it over 1 because you think something's going to happen, structure around 1. Think about your own contract duration. Step back to that point. Next 6 months are going to be interesting at a wholesale level. So, and last point, which is kind of the first point that I started with, don't forget that you control how much you use. So don't forget that you control how much you use and continue to hunt down the waste that sits in, at home or at work. That's it for me. Thank you very much for your time.